All right, thank you for joining me. This is Reflections 2020 Year in Review, my favorite sector. So my name's Andrew Thrasher. I'm the portfolio manager for Financial Enhancement Group. I also have a private research firm, Thrasher Analytics, where I share some of my thoughts. Here's simple disclosures. Let's move on to semiconductors. Semiconductors do what I think is one of the best charts for 2020. Not only 2020, I think it's one of the great charts from many years, really from the last probably decade. Semiconductors, I think, offer a great barometer to what's going on in the market. Kind of gives us a pulse of what's happening within the tech sector, which I think is important to understand. And really something I've been watching since 2014. I wrote on my blog, athrasher.com, that Dr. Copper had been replaced. Copper was thought to have a PhD. It gave us the insight into what was going on in the economy. We were very industrialized focused. So if copper was rising, that was a positive sign for the economy and thus for the market. And so a lot of people turn to copper if copper isn't rising or if it's falling with or without the market as a good sign for potential risk appetite. But it's just a way to connect to one of the main drivers for economic growth. But I believe that as we've shifted more towards being tech focused, we have a very tech heavy stock market, that semiconductors offer a better outlook into what was going on with the market. As we look back in 1990, here's a breakdown of the sector weightings. This chart's from Bespoke, and they show that tech really back in the 90s didn't have a huge market share of the S&P 500. It had less than 10% weighting in the market. So it wasn't as key of a sector, a key part of the market as much as it is now. We saw that obviously continue to grow into 2000 as the tech bubble really started to get massive, and tech became a huge part of the overall economy and really over the overall market more so. And we're starting to see that now, where tech is a huge part of the S&P today. In fact, it's just under 25%. Early in the year, it actually was, I believe, a little bit over 25% of the S&P 500. So right now we're sitting with tech being a huge part. Basically, 1/4 of the S&P 500 is tech. What drove us really most of this past summer was the FANG stocks: Facebook, Amazon, Apple, Microsoft, Google. Tech really was a main driver of growth for the stock market in 2020. And one of a good barometer for that was semiconductors. We can see that really going back to 2000, the last 10 years, go back to 2009, semiconductors are up 1,300%. Technology up to 800%, the market up almost 450% just about. And we can really see that semiconductors had this huge, strong growth. It's really was kind of the driver for technology. I'm by no means an engineer and understand how the chips work or what semiconductors are, the differences between them. That's not my forte. What I want to know is what's a key driver for the market. And I think semiconductors have been and likely will continue to play a major role in that. At least it will for me. So looking back, let's go back to 2007 through 2012. We can see that the bottom panel here is SMH. That's the Van Eck Vector Semiconductor ETF. And we can see back at the peak of the market in 2007, semiconductors started to weaken ahead of it. And then at the bottom, semiconductors were making a higher low while the S&P was making a lower low. Fast forward to 2011, again, we saw that when the market was trying to make a lower low, that semiconductors were showing some strength there, that things were starting to improve for semiconductors and likely for tech, and that should help drive stocks higher, just like it did. Now let's come a little bit closer. Let's look at 2018, 2017 through today, and we can see after the February kind of Volmageddon event in 2018, market dropped about 10%. Rallied. Then in March, it tried to we got another retest of that initial low. Meanwhile, semiconductors making a higher low, positive sign. Then as we got into second, third quarter, moving into even close to the fourth quarter in 2018, semiconductors not looking real hot. You can see here in the bottom panel, they were making a lower high while the market was making a higher high. So that was a divergence that we wanted to pay attention to and say, hey, maybe something's going on with tech that we need to know about. And then we had the correction in the fourth quarter being led by semiconductors. Now we have this year, 2020, and we had the crash in March, the coronavirus crash, global economy gets locked down, and the market just one of the largest, fastest declines in history. But what were semiconductors doing during that time period? Well, the market was actually getting back below the low of 2019. Semiconductors got nowhere near their 2019 lows. They were showing relative strength during that period. suggesting that maybe this wasn't going to be a protracted multi-month downturn. And that's what it was. And it's much easier to say that looking back now, of course, but understanding how different how markets are working together, semiconductors is a great barometer for that. Understanding how technology was actually one of the best benefactors for 2020. A lot of tech firms had huge growth, and I think that was some of the insight came from how were semiconductors performing. And now we've had since March this rip higher in both the stock market as a whole, but also in semiconductors. The SMH went from about 100 to 220. Huge move in semiconductors, really showing the strength that's been taking place in technology. And just like we can for the overall market, we can dive deeper into semiconductors, look at the internals, look at the breadth data for the semiconductor space. And so we can see that here. There's a percent of stocks above the 100-day moving average. And you can see, just like the overall market, when the internals of semiconductors begin to break down like they did in late 2018, then semiconductors themselves start to weaken. We saw it again in March of this year, where we're starting to see a lower high. Less stocks in SMH were above their intermediate moving average. And then we had the correction. Obviously, the correction wasn't caused because semiconductors began to weaken, but that was an early sign that maybe something was going wrong with semis. And then that led to what we had in March. As traders, we don't need to know what the cause of something. We just need to know that something's getting ready to occur. Let the historians write in the textbooks all the explanations looking back. But we just want to know, is there any warning signs to the market or signs that things are going to improve? Get a little bit shorter term. Here's the percent of stocks above the 20-day moving average for semiconductors. Same thing, we started to see that divergence coming into March, and then we started to see a pickup towards the low in March. More semiconductor stocks were actually rising. They got back above their 20-day moving average ahead of the final low in SMH, and then we saw then the rip higher for the rest of the year. So semiconductors have been this great kind of leader, showing the leadership of the market, which turned out to be tech, but I think semis can just be for the broad market as well, showing kind of where risk appetite and kind of where risk taking is going on. If semis are rising, then it's a good chance the market itself should follow suit. Now let's look a little bit more. We have lots of semiconductors are in uptrends. Semis itself have been ripping this year, and I think we're getting to the point now where things are getting a little overheated. So looking longer term, this is a weekly chart of the semiconductor index. A little bit more data to look at when we look at the index versus the ETF. And we can see that we're just about 2.5 standard deviations above the 50-week moving average. Something we don't see happen very often. There's pretty little green dots or arrows here to show you the last times it's occurred. We're getting a little bit stretched right now after this latest run in semis. Comparing it, if we look at the slope of this run, looking at the 52-week period, so basically the 1 year slope, it's the highest slope we had really since the dot-com period. When semis, again, they were having this rip higher then, just like we are now, and things just got a little bit overheated. So the move is becoming kind of near vertical. Vertical moves are really hard to sustain. You may need to have some type of consolidation, digest those gains, but it's hard for stocks just to continue to have that steep of a slope as we're seeing. The highest slope since dot-com period. Look now, just kind of the move from March. I drew a linear regression line here. So the middle green line is just the best fit line from the March low through today, or through last week from when I'm recording this. And you can see here that the upper line and the lower line looks at 2 standard deviations above or below that regression. And so right now we're getting to the point where we're 2 standard deviations above the best fit line since the March. So we're getting a little bit extended, both on kind of this latest move, then looking longer term back to the 2000s. Things may need to cool off. Semiconductors are a great sign for leadership. I think they will be in 2021. But I think shorter term, things are getting a little bit stretched right now. So something that I'll definitely be keeping a watch on is how semiconductors trade as we get into year end and early 2021. But it's definitely one of the top charts I look at on a daily basis. I want to know what semiconductors are doing. I think they provided great insight for 2020. And that's why, for me, it's my favorite chart of the year. So Appreciate you joining me. Hopefully, if you want to give me your feedback, hit me up on at athrasher.com, or you can find me on Twitter at Andrew Thrasher. Would love to know what your favorite chart has been this year. Let me know. Have a great day. Bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.